Hello everyone, welcome to Oliveboard. So today we are starting a whole new series in which we are going to discuss the most important topics from our RBWM paper. So make sure that you watch all of these videos and score the sure shot marks in your examination. All of these topics are very important. Do not skip any of them. And after these videos, you'll get an idea how your preparation is going and where you need to put in more efforts. So today, the first lecture, we are going to discuss the retail banking overview, the most important definitions, meanings of the terms. So let us start. First, when we define what is retail banking, so here's the general definition, according to which retail banking is a banking facility that provides financial solutions to only individual clients and not businesses. So, as opposed to corporate banking, which caters to the business class, in the retail banking, we are focusing on multiple customers, providing them with multiple products and through multiple delivery channels, catering the needs of individual customers. Now, these individual customers are segmented into various classifications. We have the lower income group, the high net worth individuals. Accordingly, we are providing customized or tailored services that will satisfy their needs. So, what is happening in retail banking? The bank caters to online or offline. So, both digital or mobile banking or internet banking, as well as branch mode. We are offering these financial services to the individual consumer. All the financial services on the asset side, on the liability side, then the third party products or para banking cater to the individual customer's needs. Now, banking we divided into individuals and firms. On the individual side, we have retail banking and entrepreneurial banking. Firms, the banking which is provided for them can be for the wholesale firms or the MSME firms. For the entrepreneurial on the individual side, the banking facilities are for agricultural and the MSME individual. But we are focusing on the retail segment in which we have the mass retail banking and the class retail banking or private banking. Mass retail banking, which is general services for the general population. Class retail banking for the high net worth individuals that will provide augmented income through fees and prices to the banks. So they have tailored services, which is also known as private banking. So let us differentiate between mass retail banking and class retail banking. So mass retail banking is the first stage in which the bank provides standardized banking products and services to the customer. So standardized. Banks do not differentiate. They are providing same qualities and characteristics in the products to the whole population. So here the bank attempts to build a sufficiently broad customer base which will serve as a stable source of funding, right? Then in the second stage of retail banking, we have the class retail banking, where the bank offers customized products and services which are targeted at a niche customer segment, which are the high net worth individuals. So these high net worth individuals are able to pay higher fees as well. So the banks will provide them customized services, which is also known as private banking. So all of these terms, these definitions are very important. Make sure that you understand them. Then, if we talk about the characteristics of retail banking, we have already seen that the banking facilities are targeted at the individual customers or small organizations, meets the large number of customers with well diversified portfolios. The customer needs can be related to a depository account or any asset side, any loans. Loans can be of many types, personal loans, then education loans, home loans. So they have a well diversified portfolio and large number of customers. So we are here referring to the mass retail banking, right? So it is focused towards the mass retail segment covering a large population. There are a plethora of service products to the various customer, so multiple products both on the liability side as on the asset side. Then delivery model is again both physical and virtual, right? So services are extended through branches, through technology driven electronic off-site delivery channels like ATMs. Then we have internet banking, mobile banking, phone banking, etc. Also, retail segment extends services to the small and medium size business as well. So these are the characteristics. Now, what are the advantages of retail banking? So here we need to make a comparison of retail banking with corporate or wholesale banking. In the corporate or wholesale banking, the risk is more. But in the client base being large on the retail side, it is spread across the customer base. This means that if 10 loans are given of small size, there are less chances, or even if any default occurs, it will be less burdensome on the bank. Then the customer's loyalty will be strong with a good scope of cross selling. Customers, they do not tend to change from one bank to another because more or less the same characteristics in the products and services is provided by all the banks. So they are loyal and the customer retention is high. Then banks can often offer the attractive and wide interest spread because again the customers are too fragmented to bargain effectively. The banks, they can use their own, we will say, monopoly power to set their interest rates, right? The credit risk is well diversified because the loan amount are relatively small. There is less volatility in demand because the demand is rather continuous on the individual side. There will always be a demand for personal loans, educational loans, and home loans. On the other hand, in the corporate or wholesale banking, demand for the assets will be more when the business is good. Otherwise, the demand will go down. Then again, large number of clients can facilitate marketing, mass selling, and the ability to categorize using the scoring systems. So we can use the large amount of data and then we can take decision. Now, if we talk about the evolution of retail banking, how did retail banking start? In India, banking was in the earlier days only focused on corporate or wholesale banking. But then the foreign banks operating in India set the trend in the late 1970 and the early 1980s. They came out with their consumer banking models with hybrid liability and asset products specifically targeted at the personal segment. So, which two banks started these types of products, introduced these types of products? The Standard Chartered Bank and Grindlays Banks. You need to remember these two names. Then Citibank also introduced their credit card products. If we talk about the Indian banks, so in the public sector, State Bank of India and other banks like the Indian Overseas Bank, Bank of India, Bank of Baroda, and Andhra Bank, they developed and marketed asset products and card products in the retail segment. So again, we need to remember these names of the banks that started retail segment in India. In fact, Bank of Baroda and Andhra Bank were two early players in the credit card business. And we are talking about the public sector bank space. All right, so the foreign banks, we'll remember the name Standard Chartered Bank and Grindlays Bank, and Indian banks, we'll remember these public sector banks. Then, although the public sector banks were early to enter because of nationalization, still they did not have the advantage of technology. The private sector banks, they entered with a new technology. They already had this technology. All right, so they entered the retail banking segment when? In the early 1990s. Then foreign sector banks, new generation private banks, they are looking at the bottom of the customer pyramid. They are providing customized services exclusively for this segment. Also the NBFCs and MNCs. Now, even the fintech and tech fins are entering the retail banking segment. and they're actually posing a big threat to the conventional banking players because of the technology advantage and better reach to the customers. So this is all about the evolution. Then if we talk about the process models in the retail banking segment. So banks have two options. Either they can develop all their products in-house, they can price their products in-house using their own staff, using their own surveys, or what they can do, they can outsource these services. So there are two options, in-house and outsource. In-house and outsource. So this again is a very important topic. So here we are given the table. The public sector banks, for the product development, they are using the in-house services, incorporating the market dynamics. Even the old generation private banks are performing the product development again independently in-house. But the new generation private banks, they're using either a blend of the in-house and outsource, or they are using the in-house services. But the foreign sector banks, because they do not have a well-established physical structure, so they are using the outsourcing. Similarly, for the product processing, stand-alone model is used in the public sector banks and the old generation private banks. But in the new generation private banks and the foreign sector banks, a centralized processing center. Stand-alone, let's say we are talking about any loan. So processing of the loan application, then deciding on all the terms and condition, disbursement of the loan, sanction of the loan, and follow up. These are the steps. So only the applications, let's say, are collected by the branches, and then for the further processing, they send it to the retail hub, the retail factory, or the CRPC. So it will be known as the CRPC model. Standalone means the branches, they themselves perform all of the steps, starting from marketing of the product to the follow up. So this is there. Then if we talk about technology, so the public sector banks use the in-house model with a certain level of partial outsourcing. Old generation use the outsourced model. New generation predominantly outsourced, and foreign sector banks also use the outsourced model. So they will be appointing any company or a firm who are professionals in this service. For example, if for the credit card distribution, any bank is using their own staff or their own resources, so that is in-house. But if we are employing third party agents or direct selling agents, that is outsourcing. Then pricing for the public sector banks is market driven and competitive. But for the private banks, old generation, new generation, and the foreign banks, it is aggressive, right? It is aggressive, or higher prices are set by them. But the public sector banks, they use market driven and competitive pricing. So these points again are very important. Definitely one or two questions will be asked from here. Next, we move on to the applicability of retail banking concepts. So, according to the Boston Consulting Group, we have four models. The two broad models are vertical business and horizontal business. When we are talking about a centralized database, or whether for each and every product we have separate processing. So in the vertical model or the vertical business, it has an elongated structure. As you can see from this diagram, under one person, it is divided into two. Then those two have other people who are working under them. So the roles are very specific from top to bottom. The leadership is located at the top. But on the horizontal business, it has a flat structure. There are only a few managers. So one person at the top, and then all the people are working under them. So we have four broad classifications: horizontally organized and vertically organized. If we see at a scale, so these are the two extremes: horizontally organized and vertically organized. Then in between, we have predominantly horizontally organized and predominantly vertically organized. So what is the meaning? When we refer to the horizontal or the vertical model, we are depending on the level of customer information available in a single platform in the database for offering multiple products and services. So, is the customer information being shared for all the products and service, or for each of the product we are separately having a customer database? So when we are referring to the horizontal model, there is the different process for each of the products, and we are offering end to end solutions product wise. But when we are talking about the vertically organized, it provides functionality across the products, and the customer base orientation is centralized. We have a centralized customer database which can be used across the products. So horizontal, for each of the product we will have a separate process, separate database. But in vertical, we will have a centralized customer database and it will be used for all the products. Then we have the segments or the types in between. So predominantly or horizontally means mostly product oriented with some common customer information. So it is predominant. Predominantly for most of the products, we have a separate process. Some products might have common customer information. Then on the predominantly vertically organized, common information is available for most of the products, but for some products, we'll be having a separate process. Now, in most of the public sector banks, horizontally organized is the standard norm. Again, a very important point. Some banks also use the predominantly horizontal. The scenario is mixed in old private sector banks, and the new private sector banks, they follow a vertical organized. Foreign banks also follow the predominantly vertically organized. So we need to remember the differentiation: customer centric vertically and product oriented is the horizontal model. Finally, we'll be seeing what is the distinction between retail and corporate banking. So in the yellow, we have the retail, and in the green part, we have corporate banking. So we already know retail banking targets at the individual segment, while corporate or wholesale banking deals mainly with the corporate clients. Retail banking is a mass market banking model. Wholesale or corporate banking looks at a relatively smaller segment. We are focusing on the business class, on the business class, right? Then retail banking is a business to customer approach, while corporate banking is a business to business approach. Banking is also a business, right? And we are offering services to another business firm, body, corporate company, anything. But when we are offering the services to a customer, then it is retail banking. The ticket size of loans is low in retail banking, let's say education loan or home loan, but the ticket size is high in the corporate loans. A firm wants to start a new venture, they want to build a whole new building. So, all of this will require much larger capital. Then, the risk is widespread in retail banking because the customer base is large, so the risk will be distributed. There are less chances of the loans turning into NPA. On the other hand, the corporate banking segment has more risk because the ticket size is big. The quantum of loan is more on the corporate side. So if any loan it turns into a bad loan or a non-performing asset, it will cause more loss to the bank. Returns are again more in retail banking because the spreads are more for the different asset classes, but the returns are low because the corporates can bargain. But the only problem with retail banking is monitoring and recovery in retail banking are more laborious because of the large customer base. Moreover, the deposit accounts which are maintained under retail banking, they have more transactions. So again, these more transactions will be of small value. So monitoring and recovery will be more laborious because of the larger customer base as compared to corporate banking. So these distinctions are very important. In the liability side, the cost of deposits are relatively less and mostly go along with the card rates. However, in the corporate banking, the ticket size of the deposits will be large and the cost will be high due to pressure from the corporate for higher rates and competitive forces. So, again, in the liability side, when the deposits are created, the cost of deposits are relatively less in the retail segment, but these are more in the corporate segment. And the impact of NPA will be more pronounced in corporate banking because again the ticket size are higher than retail loans. So all of these points of differentiation are very important. Make sure that you understand all the points like the ticket size or the risk which is more in retail segment or less in corporate banking and so on. So with this, we have completed the first important topic of our RBWM paper. I hope it was beneficial for you. Make sure that you download the PDF, you revise it, and if you have any doubts, any queries, you can let me know in the comment section. I will see you again with the next important topic. Like the video, share it with your fellow aspirants, and also please subscribe to the channel so that you do not miss any of the updates. Thank you so much and all the best.